Hello options traders, Steve Ganz here of SJG Trades. I wanted to share with you just one of the sections here. Actually, I'm going to move my face up here. One of the sections here in my new deep dive calendars and diagonals course. And this is going to be the application of time spreads. When, where, how might you use diagonals, excuse me, calendars, etc. So let's just take a look at some of the content that we're going to be covering in this section. These trades are often used as opportunistic trades. They can also be used a lot as adjustments for standard trades, like the butterfly is kind of my go-to trade. And in my deep dive butterfly class, I talk about using these a little bit, but we don't get into the nuts and bolts of when to use them, how to use them, what are the characteristics we're looking for in the market before we apply these, etc. So again, one of the biggest challenges with time spreads is being able to model the complexities of those particular trades. And I'll also tell you there's a major misconception out there about these trades. And we'll get to that in just a minute. Prior to that though, let's just look at some of the things that we're going to look at in this course. We're going to look at long versus short calendars. We're going to look at put versus call calendars. Calendar spreads around earnings. Now I used to do a lot of earnings trades, butterflies, condors, vertical spreads, etc. I've pretty much dropped all of those. The only earnings trade I will do is a calendar, and there's very specific reasons for that. And I show a lot of examples of that as well. Live examples, actual trading examples. Going to share some back testing information, although it's limited back testing information, but I'll share some back testing information. We'll get into double and triple calendars, calendars versus diagonals, time spreads as adjustments to other trades. Time spread widths. What happens if you have a really narrow width in days between your front and your back spread? We're going to take a look at that and how, in my case, I actually use wider back spreads as a little bit of a hedge in some investment accounts as well. And then we're going to talk about time spread best practices. And then, of course, there will be a whole section on questions, etc. Now, this is just one of the sections of this class. The very next section after this is going to spend a significant amount of time on adjusting time spreads. What do you do if the market goes up against you, down against you? What do you do if there's a volatility shift in the market that somehow impacts your spread? And for that, let me just show you something here. So what I meant by one of the big questions is a calendar spread a positive Vega spread? In other words, you will often hear people say that, oh, a calendar is a perfect trade for lower volatility environments because when volatility increases, that trade will show some profit. And the reason people say that is because they superficially go to an options trading platform. They put in a calendar like this one. In this case, I have sold the front period option, the 42.25 on November 17th. I've purchased the back period, the December 15th, 42.55. For this, I've paid $2,700 for this option. And of course, we can do this in SPY or anything to where it's much less expensive. But here's what I want to take away, want you to take away with this. Implied volatility is currently at 19.7. So if volatility were to rise, this trade looks as though it would quickly make some profit. If volatility were to drop, this trade looks as though it would quickly lose money. Now, let me show you reality. The one thing that virtually no software takes into account, but every person that trades a time spread has to intimately understand this information. And that's what this class is all about, is understanding how to dissect and utilize this very specific thing I'm going to show right here. And that is that right now, every program out there pretty much takes an average of the volatility of these two options. And if this increases, it's increasing both the front and the back period. It is decreasing both the front and the back period. If we come in and we look at these two options, we can see that our further out option here, in this case, has a volatility or an IV of 19.5. Our front period has an IV of 19.8. So now these are a month apart, so there's not a significant difference, but normally your front period, your shorter dated option, will almost always be less volatility. In this particular case, it's a little bit higher volatility. That's actually a favorable environment for putting on calendar spreads. Does not mean it's going to be a winning trade, but it increases the odds in your favor. And we get into that deep in this class as well, looking for those scenarios. I show you lots of examples of those scenarios. But let's get back to the case in point here of what really happens in a calendar is if we take a look at these two volatilities separately. Again, we can see where they're at right here, but let's just say there's an event that happens as we start approaching our first expiration date of November 17th. As you get closer and closer to that date, or even today, and today is about October 20th, so about 28 days out, if some event were to happen today, a news event that were to spike volatility in the world, the volatility tends to spike more in this front period option than it does in a further out period option. So think about this for a second. When people have something that spikes fear or panic in the market, they're going to run to closer dated options to buy that insurance or buy that protection that they need. When that happens, that drives up the price of that front period option or the shorter dated option. Now, in a calendar, in a long calendar, those are the options that I am short. That's not going to be good if volatility goes up in those front period options and the back volatility stays in place. So this is what I mean when people think that implied volatility or when they think that calendars are a positive vega trade, meaning that when volatility goes up, it's going to be a profitable trade. Well, it depends on where the volatility goes up. Is it going to go up in the front period? Is it going to go up in the back period? Is it going to go up in the front period more than the back period? Exactly how do those two periods go up or down? Now, another scenario. Right now, we're in a little bit higher volatility environment here on October 20th, Friday, when the market closed, because the market had sold off quite a bit. So again, as you saw, that front period volatility is at 19.8. Now let's just say that next week, right now we're fighting, we don't have a House Speaker, there's war brewing in Israel, there's a lot of different things that are happening out there in the world right now from a political standpoint or a global economic standpoint. So if some of those things start to subside, if the fear in the market starts to subside, and generally speaking, when fear subsides, it tends to subside in the earlier dated options, more so than the further outdated options. So if that happens and volatility starts to decrease in this front period, and the back period stays about where it is, this trade could actually generate profits very quickly. Okay, so it's all about how the front period and back periods move against each other, and that's what we're going to get into in some pretty heavy detail. Now, as you might be able to imagine, one of the sections in here was calendar spreads around earnings. Okay, earnings are major volatility events. We're coming into earnings season here just in the next couple of weeks. So this particular new class is going to be launching on November 1st. So in 10 days, this class is going to launch. And right now I'm offering a pre launch discount. So I'm going to put the link down below. It's going to be good between now and Halloween. At midnight on Halloween, this is going to go away. But for right now, if you want to get the deep dive calendars and diagonals course, there will be a sizable discount that's going to be in the link below. I should also say that those of you that might not currently be in my trading group, I'm going to pause here just a second. I'll share some information with you on that too, so you can kind of see the results since I started that group. But there's going to be a special that also will allow you to not only join the calendars course, the deep dive calendars course, but also join the alert service as well. So just a second, I'll pull that information up. Okay, so this is a chart right here of every single trade that has been shared, my live trades that I'm making in the alert service. Now, this doesn't look like a huge number, I get that, but keep in mind that what I do in this particular service is I try to keep every trade at about a $2,500 max risk when I open it. So I create the trades, and most of the trades here are what I'll call income style trades. They trade fairly slowly, and you know, I'll open up a trade. Usually it's a butterfly or a calendar or diagonal. More often than not, it's butterflies because I find them to be a little more forgiving and a great trade for newer traders looking to trade income trades. Most of these trades are going to be open anywhere from 2 weeks to maybe as long as 6 weeks or even 8 weeks in some cases. The trades that I put on, generally I don't put them on until the last 90 minutes of the day, and then when I do put them on, I send out an alert, and that alert consists of not only the details of the trade, but usually anywhere from a 2-minute to a 5-minute video that explains exactly why and how I'm putting on the trade that I'm putting on. And then once I put that trade on, and these are not, you know, day trade style trades. These are trades that you can put on at your leisure. Many times that trade will set out there for, you know, 20, 30, 40 minutes before it fills. So this isn't, for the most part, very time sensitive sorts of things. And again, I tend to do this in the last 60 to 90 minutes of the market each day is when I'll usually put out any changes I'm going to make. Some weeks we might only have, you know, 2 to 3 changes in a week. Other weeks we might have 4 or 5 changes in a week. But again, each one of these trades starts off with about $2,500 in risk. I usually will not have more than 3 to 5 trades open at a time. So if I had 5 trades open at $2,500 in risk, that would mean that I would potentially have $12,500 in risk on the table. So you can see if that is my working capital and I'm pushing $16,250 in profit, that's over 100% return in a year on these trades. Now, not only do students in this course get my current live trades, and I'll show you an example of what that circle looks like here, or that group looks like here. So this is what the trading community looks like, and you'll see on the left side here that I have 2 key things, 2 circles. One of them is the actual alert service and the trades that are open right now. So some of these trades that have an X in front of them, those are trades that were closed this week. So the others are trades that are open. One of these is just an educational trade above and beyond the 5 where I'm showing people how to trade the wheel strategy. But let's just look into one of these specific trades. We can come into, let's see, let's just take a look at, I think I've got a calendar that we just opened. That's a broken wing, but here we go, our calendar right here. And so this trade, this is in chronological order. So if we come down to the bottom here, this is when I open this particular trade. Here's a video that explains everything about the opening of that trade, why I opened it the way I did, etc. That trade was opened 8 days ago. This is what the trade looked like after it was filled. Then the market started moving up, so I put out a video explaining how I was going to add a second calendar to this trade. Then our market ripped down here a couple days ago, And I came in and I showed how I'm adding yet another calendar, this time down below the current market. And I explained how and why I'm doing that and what was my decision process for making that particular trade. But you not only have all of these open trades as part of the service, you also have the closed trade archive. So every single trade that I've ever made that makes up that list of results is in here with all of the same details. So if you want to come in and look at the Verizon earnings trade I did, which we earned 32% on that trade in 3 days, you can come in here and basically do the play-by-play. This was live as it happened in the markets. These are my opening, my adjustments, my closings. So this is also an excellent learning tool for people. So those are the couple options that you'll have available to you. Is if you just want the deep dive calendars and diagonals course, you'll see that link down below. I'm also going to put a link down below if you're interested in the alert service as well, where I share all of the live trades that I'm making. So with that, I'm going to wrap things up. Thank you so much, everyone, for taking a look. If anyone has any questions as well, also feel free to put them down below, and certainly like and subscribe. I'm also going to put a little freebie down below for people that are interested maybe in learning more about butterfly trading. I'll have a link there where you can get kind of some free additional educational materials. So that's going to be it for now. Thank you very much.